What's up, all my investors? Welcome back to HINANCE. My name is Shaddai, and I'm here to break down the complexity of the financial world for everyday people like me and you so we can make some cheddar, some moolah, some dough. Whichever way you want to call it, it's all for the good. I appreciate you all for watching. I hope you're feeling good out there. Let me know in the comments how your portfolio is doing. Are you making money? Are you losing money? I hope we're all making money, and if not, I'm going to hopefully try to help you get on the right path to make money. We got a lot to talk about today. Some economic news with some stimulus talk that, Joe promised us that check. So we got to talk a little bit about that, and we also need to talk about the rocky, bumpy road ahead and $20 stocks. There's a lot to discuss here. And before we get there, I do want to show my appreciation to people that have been watching since day one, all my people in the stocks group chat. If you want to be a part of the stocks group chat, just shoot me a DM above and I will get you the details needed. Other than that, don't forget to like, subscribe, share the channel with a friend, a face, and don't forget to support the channel by heading to the merch description link down below. The link for the merch is in the description box. I just mixed all that up. I'm so sorry. But yeah, y'all know what I mean. Support the channel by heading to the website and buying some merch. Let's get right into it. Somehow, China has become the #1 destination for foreign investment. This is very serious now. This is very serious because when we're talking about the giants, the battles, who's going to run the world? Is it China? Is it US? Is it Russia? Foreign investment is very important. So we definitely want to be paying attention to that because recently our GDP reports came in for 2020 and they weren't good. I think they said it shrank 3.5%. And listen, some of the details were it stunk, and it really impacted the numbers for Trump's administration. I think they said that GDP contracted like 1% under Trump and like 1.8% under Obama. So technically Obama did better. Obama inherited a bad situation and did better, and Trump maybe didn't inherit such a bad situation and did worse. But I know that what happened had a lot to do with it, so we all know that. So that will kind of save him on that end. Aside from that, there's stimulus talks. They're back in discussion. Joe said he gonna give us that $1.4 thousand check. I almost said 1.5 million. $1,400 check that he said that we were due. And they're trying to push that through right now with a $1 trillion stimulus package, which will also, I'm pretty sure, give money to the whole vaccine process, checks to the people, probably more unemployment, and probably more money to small business. I haven't looked at all the details, but listen, I'm not here to put the food in your mouth. I'm here to let you know that there's a table to eat. So you got to do your own research. You got to do your own due diligence. I'm not here for all that. Y'all know that. For the people that have been watching today, when y'all know I'm not here for that. I'm just here to wake you up real quick so you can go find the information on your own. Now, Secretary Treasury Yellen recently was sworn in, and she had said some very, she said she got quoted on something, and I'm like, okay, so they're very serious. This is gonna happen. This isn't gonna be like the last time where it was like a big debate and it went on. This is gonna happen. Now, she had said that the price of doing nothing, I'm not gonna quote her quote for quote, but pretty much said the price for doing nothing will be more than if you did something, and even if you did something big now. So it's pretty much saying, she's saying, listen, if we don't get this money out and we do nothing, the cost down the road is going to cost more than that 1.9 trillion we're trying to do now. So we might as well just pass this 1.9 trillion. Obviously, Republicans, I expect them to play hardball. When don't they when it comes to the Democrats? But I do believe in, I'm over here falling. I do believe in this this administration that we had as far as getting some stimulus to us. But Joe, and anybody watching this, if you agree with me, I'm still waiting to hear more on this 50,000 off the student loans, or at least 10,000 off the student loans. Who wants to put an I in the comments below if that's what you're waiting for? That's really what I'm waiting for. You can keep all the checks, give me money back on the student loans, and I'll be a happy guy. We have a bumpy trading week ahead, but don't let that scare you. Find your opportunities, focus on the companies that you're trying to invest in. But with the last week battle war that went and happened between the hedge funds and the retail investors, I only expect it to continue, especially with all the backlash that they're getting. I definitely do not agree with regulating us retail traders, because if you do, then there's no free trade. Y'all can run up stocks, the hedge funds can run up stocks, but the retail investors can't, the poor people can't. It's just not fair, and I know many people agree with me. So I only expect this week to just be more retail hedge fighting and battling. I did say in my previous video that there was probably a market correction coming, and I wouldn't be surprised if this kind of starts that little road down the hill, because if, let's say, if a hedge fund loses, this is just an example, $5 billion on a GameStop, for example, or AMC, and they're up a bunch of money on Apple or Tesla, or this is just an example. Obviously, if they take that out, they need to pull them profits from somewhere else to replace that money so that they can get back on track. So the rest of the market will be affected by this war that's going on, but I'm all for the war, because in the end, it's all going to recover. It's all going to, it's gonna get back to its ways. This is just a temporary battle, so you need to expect a very bumpy up, down, but there's opportunity there, so don't be afraid. Also, this is a big week for earnings reports. We got some big names reporting earnings this week. Amazon, I seen Qualcomm, I seen a handful of companies. I'm not gonna say each and every one, because obviously y'all can do that. I don't need to be feeding y'all with the spoon. But yes, pay attention. Earnings season. I do expect a lot of companies that report good results to kind of pull back, and mainly because Apple did it, which was very confusing, because I was waiting for Apple to just like break out. But I get it. People taking profits when they hear this good news. So I'm not surprised if I see a lot of companies doing well pull back. That only creates more buying opportunity for it to shoot up in the future. Also, the S&P 500, I think, went below its 50-day moving averages. So if you're a technical person, you're a charts person, that is very important information. Maybe for some of you that don't mean much, but look it up. Look up what it means for when the S&P 500, what has that happened historically when the S&P 500 moves below its 50-day moving averages? These are questions you need to ask yourself. When you hear these words, these terms, these forms, you need to ask yourself, okay, what does that mean? Google it. You got your little Google box in your hand. So it's not that hard to find information if you want to make money. So pay attention. The word of the week this week is short squeeze. And I had to bring that word up because of all the stuff that was happening between GameStop, AMC, Nokia. I felt like I needed to share what the word means in case people were confused why this stuff is happening. So let me give you the Google definition of short squeeze. It is when a mass of investors looking to cover short positions start buying at the same time. Maybe that doesn't explain it that well. Okay, so let me break it down in a more simpler term. Let's see. I got this battery right here in my hand. This battery company, their battery has been doing that well. It doesn't last long. It always dies. You got to charge it longer than normal, longer than they promote it. So it really stinks. But there's a new battery company. So, and the new battery company is doing better, but the new battery company is doing its thing over there. But we're still focused on this battery company. I'm going to bet that this battery company stock, which is, this is for example, let's say this stock is at $5. I'm going to bet that this stock is going to go down to $1 or $2. And I'm going to bet a lot of money on it because they're just not doing well. They're not selling more. They're selling less. So I'm going to bet that this stock is going to continue to plummet. Well, that is what the investors are doing when they're shorting a stock. They're shorting a company. Now, what happened was there were some guys that worked very hard on this, and they still believe that this battery is really good. They still believe that all it needs is a few tweaks. So they say, you know what? Let's get all of our friends. Let's get everybody to get this stock back up to 20. because when the investor shorts, they have a time period, so it needs to get to that short by that time period. I believe that's correct. If I'm not correct, please let me know in the comments. So the people who put their sweat and hard-earned labor into this battery, they said, yo, we're telling all our friends to buy this thing up because we don't want this thing to drop, because if it drops, those other guys that we don't like get money. But if we all buy this stock and it goes up, those other guys that bet against it, that bet it to go down, they will lose money and lots of it, because usually they put up a lot of money, because when they're shorting, it's off of fundamentals, it's off of realities, it's just a realistic perspective. They don't expect a GameStop to last that long. They don't expect the AMC to last that long, especially now in this digital world that we're entering, this reset that we've entered in. So that's kind of what happened. So that short squeeze is that everybody purchasing to bring the price up so that those people that shorted it lose that money. So that's what's happening. It's a wild thing to do, but you can definitely make money if you get in at the right time. There's definitely opportunity. I know I was saying that I wouldn't buy into them companies, but I can't lie. I got into Nokia. So, and I still think that Nokia has some room to run. But let me know if you disagree. If anybody made money down below, let me know. If you made money at AMC, GameStop, Nokia, anything. Just to let people know, not anything, but anything that got short squeezed, just to let people know how real it is. Shout out to Mario, big man in the chat. Made a lot of money. I'm not going to say his financial gains on the internet, man. I'll leave that up to him. But yeah, very proud of him. Very proud of you, Mario. Shout out to you. You definitely earned the badge in the chat as the big shark. So there's opportunities, y'all, and that's just what I'm here to share to y'all. There's definitely opportunities, and I hope that this word helps you understand a little bit more as to what is going on. Maybe why you lost money. Some people did lose money. I know people that did lose money. So just be very careful when you're short squeezing. Stocks under 20 that you should be watching. We're gonna talk about a few. I won't be saying their price specifically. I just, y'all need to do something. Y'all need to do something. I can't just be doing it all for y'all. But I'll say the names and y'all can go look up the price. They're under $20. These stocks, they can be risky. Some of them can be risky. Some of them are long term. Some of them are shorts. Some of them swings. Some of them are dailies. It really depends on your trading strategy. But all these companies I am looking at, I'm not telling you to buy them. This is not saying buy. None of the stuff I said in this video is trading advice. I'm just speaking how I see things to hopefully open up your vision a little bit more so you can see stuff a little bit better than you have in the past. The first stock I want to talk about is Zynga, and y'all know I've been talking about Zynga for damn near a year now. And I'm still going to keep talking about them. They are the world leading mobile game producer. I got to keep adjusting the glasses. The world leading mobile game producer. They've acquired companies that are, working on better ad revenue. And I do expect their quarterly earnings coming up to be very well. I'd be very shocked if it's not. I think that this stock can hit 12 to 15 depending on the volume that's being traded, depending on the momentum, depending on what just the news coming up. So put them on your watch list. Trust me, Zynga, it's been doing this thing. It's slowly moving, but it has a future, and I'm holding Zynga for a pretty good time until I get a nice pretty payday. Next is Vail. Now, anybody wondering how you can invest in the EV market without buying Tesla? There's plenty of ways. There's plenty of ways to invest in the EV market. One of those ways is to invest in a material that the car company is going to need. One of those potential materials, this is a risky one, can possibly be nickel. And who is a producer of nickel? Vail. There has been some rumors of talks of a deal between Tesla and Vail. I know Tesla's working on their producing their own batteries, so I know that they're working with materials, and whichever material ends up being the best, I can guarantee you there will be a nice deal, and I am believing that may be Vail. May be Vail. I could be wrong, but I have a nice hunch. I had a hunch on them before they propped up a little bit, and now they're kind of ranging, consolidating, and I do feel that they may get a break. If not, then maybe Tesla will go lithium. I don't know. There's still a little bit of homework left for that, but keep your eyes open for Vail. Carnival. The cruise lines. Listen, I don't even like going on cruises. I get seasick. But there's potential here because they had recently pushed back all their boats, their fleets until April. So no one's on no cruise boats right now up until April. And everybody in the industry did that. So that creates kind of a range. Maybe it'll create a dip, a little bit of a dip. But there's opportunity because once they start getting those boats going, once people start getting on them, because people will, believe it or not, people are out here traveling. People will get on those cruise boats to just enjoy their life. And then what's that going to do? That's going to bring back sales. And if there's a very good turnaround in the year two, Carnival might be nice to have in your portfolio because then that means that stock is going to soar to a nice number that will be profitable for you if you get in at the right time. So make sure you put Carnival on your watch list. But also, if you disagree with me, if you think Norwegian is the best, let me know in the comments. That's just my preference. I'm just sharing my preference, but you may know a little bit more, and it's always good to share information or ask questions or challenge what I'm saying because it creates dialogue, which is very good. Another risky stock is GNUS, Genius Brands. They are content creators. Y'all know how I've always felt about content creation. Content creation is always king. And what's very special about them, very affordable stock, by the way, but it's very risky, is with their content, their audience, their target audience is the kids. And the kids can consume hours after hours after hours after hours after hours because they don't got nothing to do. They got an adult that takes care of them. That makes sense for me. They've also done partnership with Arnold Schwarzenegger. I definitely didn't say that right. And Shaq as main characters for some cartoons that they have. They have their cartoon channel. I think it's called Cartoon Channel, Cartoon Network with a K. And I think that long term, they will be doing some things. All they really need is one hit show for the kids to love, and that stock can definitely jump up. There's a little bit of movement going on right now, so make sure you put them on your watch list. Definitely had to mention some honorable mentions for stocks under 20. Outfront Media, I expect advertising to get back to its old levels at one point. Sooner or later, I really do think it's going to get there. The only thing I want to see Outfront Media do more is change their paper signs to digital. This is the perfect time for them to go completely digital on all their billboards. It may be costly, but it can be game-changing down the road for them and just make them more money because they're cutting out costs for having the people to go up and physically put up the paper billboards. So I'm sure they're slowly getting there with that. But like I said, that's going to cost money, so they're an honorable mention. And then the last honorable mention is GE, and they're just a stock you want to watch because that's one of America's babies, and they've definitely showed some good signs. Missing profits, but their free cash flow, they've done very well. I think Larry Culp is the CEO, and he's done a phenomenal job. So if you want to get into the industrials, keep an eye on GE. Like I said, it's just an honorable mention, and like I said, if anybody disagrees or if there's anything that I miss, if you have any stocks, please let me know in the comments below. I'd love to just have a discussion about what I shared and maybe what you have to share. I appreciate you all for watching. I hope you learned something today. Don't forget to like, subscribe, share with your families, friends, cousins, sisters, brothers, so we can all make some money. Don't forget, if you're interested in joining the stocks group chat, we're building financial wealth. The future millionaire, shoot me a DM above, and I will get you all the details. Thank y'all for watching. I'll see you tomorrow.